Hi, my name is Chaster Johnson. I'm the co-founder of Stock Boss Up. It's an app that helps people learn about investing. I'm here with Guivens Andre. He's a fellow entrepreneur that I talk a lot with about investing. Guivens, just quickly tell everyone what your software is.
Yeah, man. So name of my software is Amie. So Amie is a language software that teaches English in a relevant contextual manner to low income, non-English speaking immigrants. The name actually stems from my mom, who's an immigrant from Haiti. As a company, we're looking to personalize the struggles of immigrants through my mother's name. That's
Awesome, very good. We'll have links in the comments below. So this is actually a part two video. The first one, Givens remembered when he was a new investor, and he
yep,
asked me questions like he was a new investor. But
yep,
Givens is not a new investor.
yep.
He's been investing for a while. So I've asked him just to stop giving me the softballs and actually give me hard questions that I may not be able to answer. So this is gonna be a challenge for both of us because he wasn't ready for that. But it's all good. We're gonna roll with it.
Yeah, yeah. Well, uh, thank you for the introduction, man. The first question I have for you is, so okay, nobody wants to lose money in the stock market, right? And you want to do your due diligence and know as much about a stock before you can spend money to do it. Now that process looks different for everyone, right? And so if I'm looking to invest in a stock that a friend recommended, what is the best thing to do to make sure that I've done my due diligence in checking out that stock before I can throw money at it?
So the one advantage that we have as retail investors that I truly believe,
Mhm.
uh, give you a background. A lot of people in the corporate world, these CEOs, they're in their own little world. They're
Yep.
not in the normal economy sometimes, and it's a weakness for them. But
Yep.
for us, you know, let's say you have someone recommends, let's say Tesla, since we've already talked about
Right.
it.
Yeah.
You're you as a normal person, you and I, we
Yep.
can go and try a Tesla. We don't
Yep.
have to even read the reviews. We can go out and drive a Tesla for free and try it out. They don't care.
Right.
You could do that.
Yep.
You can go to a McDonald's and you don't have to buy McDonald's if you don't like their food. But
Right.
you can see if they're packed or not.
Right.
And so you can do this reality check of a stock. The first thing you should do when you have a stock recommendation is make
Hmm.
sure you understand what the heck they're doing. If you
Right.
don't know what the heck they're doing, you need to just stay away from it because you're going to
Right.
lose money. There's few guarantees in the stock market.
Hmm.
It's almost guaranteed. If you don't know what the heck a stock is doing, you're going to
Yeah.
eventually lose money on them.
Right. Okay. All right. So I'll tell you when I first got started with investing, right? Graphs almost deterred me from ever putting money into the stock market, right? And because there's so much lines and numbers, and it's like, am I reading it up and down, right to left, left to right, like what's going on? So how do you read a graph? Or what are the most important aspects of a graph? Because there's a lot of information on there that really sometimes aren't even really important for a new investor to get an idea of what's important or what they should be paying attention to.
So there's a lot to talk about that. I'll say first off, if you do use the Stock Boss Up app, you won't see any graphs. We're going to have graphs on there eventually, but and Givens just randomly asked me that question. It wasn't like we didn't plan this question. I intentionally have put off putting graphs on there because of that very reason. It stirs up your emotions and doesn't give you anything relevant.
Yep.
It's just a chart.
Hmm.
Charting is very good though. As I said before in the last video, if you're a trader, traders use charts. You can dedicate 6 to 8 hours to charting. Go for it. There's a whole bunch we can talk about. Simple moving averages. We could talk about God. We could talk about resistance lines. There's true phenomenon that happens day to day that a graph can show you about the
Right.
supply and demand of a stock.
Okay.
But if you're an investor, they can kind of tell you where to get in and out. But if you're trying to invest day to day, you're going to just lose your mind looking
Right.
at these. It really is not healthy as an investor to
Right.
look at them every day. Warren
Right.
Buffett doesn't look at graphs at all, probably. He says he doesn't look at the price, which means he doesn't look at the charts really.
Okay.
It's really important. So I'll say one last thing about charts. I've literally have done in hedge funds billions of calculations of different charting methods.
Mhm.
So when someone says that a charting method is guaranteed, it's not. A lot of the charting methods are known by everyone
Yep.
and that's doing a trading. So as soon as everyone thinks it's a good idea, they all try it, and then that opportunity is gone. It's constantly happening.
Right.
So try not to just be sucked into a charting idea unless you look into it yourself. You need to dedicate the time to really understand a charting methodology before doing it, because most of them are going to fail on you.
Okay. Okay. Well, when should I sell or when should I buy, right? Because you don't just want to keep buying, 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 right? And overdoing it, or you don't want to just keep selling, selling, selling. So like, how do I know when I need to sell and when I need to buy?
So that's a big question. We'll have to probably do
Yeah, man.
another. We're going to have to do another YouTube video. Darn it! But I'll give you one example. The
Yeah.
truth is, it depends on the stock. Uh, Amazon, Google's the high growth stocks are a completely different beast that I've failed out actually myself
Uh-huh.
compared to a boring manufacturing stock,
Okay.
for example.
Okay.
So under the assumption that these are healthy companies that are making money,
Hmm.
a boring a boring utility stock or a boring manufacturing stock are
Hmm.
pretty. They're going to go right back to that value pretty quickly.
Okay.
So if you look at the book value is essentially how much do they own and how much money do they have.
Yep.
So if you have a book value of $50 per share and the company's worth $100 a share,
Mhm.
that means that half the money you're putting in goes right into assets that are real, like
Right.
cash. They might have $50 worth of cash per share in their
Right.
book value, but
Right.
that's one way of checking it. The other part of it is the earnings. How much earnings do they have? So
Right.
if they're making $50 a share, let's say that this is real things that happen sometimes. You have $50 in assets per share, and they're making every year $50 per share, and the price is at $100 a share. That kind of feels low, right?
Yeah.
Low
I do.
stock value,
Yeah.
right? Because you're going to make that money in earnings in 1 year's time.
Right. Okay.
Typically, investors for boring stock look
Hmm.
for 10 years of earnings that equal the value of the stock.
Okay.
That's a starting point. That's just like the starting point to investing in boring stocks.
Okay.
Growth stocks, oh man, it could be out of whack a lot. But if they think there's potential, the market won't care. They'll keep on raising it,
Right.
and then traders will get in and they see that volatility and they're going to try to wreck you by scaring you out.
Okay.
So Tesla is very much a volatile one. Traders go in there all the time because they know there's action
Hmm.
and the markets will swing back and forth.
Okay.
So with these kind of high growth stocks, you don't worry about earnings as much. You look at the revenue growth. Many
Okay.
times the stock price is much more aligned to revenue growth than it is earnings, which is kind of scary, but it means that investors don't care about the costs that are being incurred. All they care about is the revenue growth.
Okay. Okay. Well, let's say I've made some money, right, off, of a stock. What am I to do with the profit that I've made? And what am I supposed to do with the money that I've made back? Is it smart for me to invest both the profit along with, the initial investment, or should I only invest back the profit that I made?
I think it's based on the situation. What's ideal? Let's say you're putting $250 a month into stocks. You're
Okay.
a minimum wage person, but you're saving so much that you're doing $250.
Not like me.
If you, yeah, I mean, I used to do it when I was in my early 20s. That's how I did it every month, $250. It just doesn't matter how broke I was or whatever. I saved up and would just put that much money in. If you make in a month $250, that's how much you've just put in. Take out the
Yeah.
rest. I want people to really think about their investments as income for themselves. That's how it should be. People don't want to invest all the time. It's boring to a lot of people, but it's necessary to have that extra income to supplement in your life. So I think if your goal is putting $100 in every month, and you've made more than that in the stock market that month, man, who am I to say that you shouldn't take it out and spend on yourself?
Right. Okay. Well, I'm gonna give you a good one, man. This might be my last one. I'm gonna give you a good one. Um, just from our personal relationship and knowing you as a person. What's the difference? What's the big difference between Bitcoin, and stocks, just like regular investing in the stock market and investing in Bitcoin? Like, how do they differ?
So stay tuned for our next video where we talk about Bitcoin. We talk no,
Right. Literally.
and I don't even know where to begin.
Whole segment.
So give you a little background that maybe even Guivens doesn't even know about me. The when I was in the hedge fund world, I ran crypto hedge funds. That
Right.
was one of the hedge funds I ran. So I know more about crypto than I ever wanted to know. Crypto at the very end of the day is money that people can use that's transacted online
Mhm.
that is trustless. What that means is there's a bunch of machines that are scattered all over the world that are checking to see that all the accounting is done properly on this money.
Mhm.
It's very different from stocks. It's more like buying forex or buying different foreign currencies. If you
Right.
buy, it's essentially it's actually the exact same thing. Honestly, once you start doing it on a normal brokerage site, it's the same thing.
Okay.
But the difference is, oh god, man, this is like another hour video. I'll end it here. I'll say Bitcoin is a forex kind of investment, and stocks are investments in an actual company that has regulations around it.
Okay. 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 So one advice I actually remember from you, sometimes when I invest, in the stock market, I check every day to see how the stock is doing, right? And sometimes it's worth your time to do that with the stock market, right? Because you can see major growth overnight in a certain stock. But is it ideal to, practice that same habit with Bitcoin? Should I continue checking Bitcoin every day, or should I just invest and not look at it for a little bit?
So we're doing a culture change here, man. This is hard because no one wants to do this, but this is
Yeah,
what you really should do. You
yeah,
shouldn't even look at the price. You shouldn't even care what the market's doing. You have to sometimes when like there's a pandemic. I get it. It's just like you just lost 20% of your money. I get it. But like week to week, day to day,
mhm,
for a stock, you shouldn't care about the price. You should care about the company. Read about the company. Read its quarterly statement. You know, spend spend on the weekend, Sunday morning before you do anything else.
right,
20 minutes reading their company report, and then realize that half of it is nonsensical, and then try to figure out what the heck they're talking about. I've read a ton of reports, and I still find some of their stuff nonsensical. I'm like, what
right,
are you talking about? What is this? This sounds very unreasonable in terms of what they think their company is going to do. So
right.
go in there with skepticism and try to learn about the companies you own, not just the price every day.
Okay.
Man, I really appreciate your questions. Thank you everyone for watching us. Just mess around with investing, and we'll keep doing this. So thank you very much.